Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Danielle Shea. She is the Director of Options over at Simpler Trading. We're going to take a look at a couple sectors that have exposure to tariffs and some that might be bright spots within the market. Danielle, it's great to have you back in New York with us. And you know what? There's a lot of sectors out there that have significant exposure to the trade rhetoric, and we've seen that over the past couple of weeks. What are you taking a look at there?
Yes, that's correct. So the first sector that was hit the hardest was the industrial. So you have companies like Boeing, John Deere, and Caterpillar that are producing products over in China that were primarily hit by steel tariffs. Now the issue is that the next round of tariffs is potentially going to hit retail and especially footwear manufacturers. So that is going to send effects throughout the retail industry in America.
All right, now we always talk about rise of the Phoenix stocks, the stocks that don't have exposure to tariffs that might get hit in sympathy with the market, but could be interesting buy opportunities. Where are you seeing bright pockets in the market?
Yes, that's correct. So when I look at the market, I mean, yes, it's gotten hit throughout May, but you have to think about the fact that there are a lot of areas, like you said, that aren't getting hit. So I'm primarily looking at the cloud computing sector as well as cybersecurity, and then I also love payment processors and credit card manufacturers.
And one indicator that we're not hearing much about is the all-time high in consumer debt.
Yes.
That's an issue.
Yes, the consumer debt is incredibly high right now, and you have to think about that. Who is making money off of that? You have companies like MasterCard, Visa, American Express, and then you also have up-and-coming companies like PayPal, which has Venmo, and that is huge with millennials.
So why would they benefit from a rise in consumer debt? Are they concerned about default at all, or they're just seeing transaction rates move higher?
Well, you know, in the e-commerce age, people are buying things online, and when you buy things online, you cannot pay with cash, right? And so more and more and more people are using credit cards all the time, and so these are the companies that are benefiting off of it.
And you wonder if that's the reason why there is a rise in consumer debt. When you have cash and you see that pile move lower, like when we were younger in the babysitting days and so forth, it was something you can conceptualize. But now when you shop on Amazon, guilty as charged, it's just point and click. You can't, and you have an entire generation of people out there who have never had exposure to saving, you know, cash in your drawer, and it's just always been point and click.
Yes, that's definitely correct. And I mean, what you said about the defaults, I mean, yes, I would absolutely keep that in mind. But as of right now, the charts and the chart technicals as well as the fundamentals look excellent, and so for this moment in time, I'm continuing to focus on them to the long side.
What about overall portfolio strategy? Because even though May was a bit rocky, we're still near all-time highs. What do you do at this point? Are you buying protection? Are you looking to, you know, add when we see these pockets of sell-offs?
So right now what I'm doing is focusing more on a little bit shorter term time frame trading. We do have quite a bit of technical resistance in the Nasdaq. I would say around 7,400 up to 7,600. And so if we can get through that area, I will add on a little bit more exposure in my portfolio. But until that happens, I'm just focusing on the Phoenix stocks that have been strong throughout it all.
All right, Danielle, thank you as always for joining us.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.